guys, good morning, welcome to the live session of Stocks Sniper Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.
Welcome to Stock Sniper Trading. Ready to transform your trading? Discover the perfect Stock Sniper trading plan for you. At Stock Sniper Trading, we execute trades in real time on live sessions with proven strategies. Let's take you through our membership plans. Live trading and Scalper Pro signals. Our monthly plan starts from $49.99 USD plus tax. Our 3-month plan starts from $149.99 USD plus tax. Our yearly plan starts from $549.99 USD plus tax. Our lifetime plan starts from $999.99 USD plus tax. Stock Sniper Trading signals. SST monthly signals at $29.99 USD plus tax. SST 3-month signals at $89.99 USD plus tax. SST yearly signals at $249.99 USD plus tax. For more details on our one-on-one trading and consulting and subscription plans, kindly visit StockSniperTrading.com.
Recording in progress.
Hey snipers, welcome. Good morning. Thank you guys for joining. It's almost 11 a.m. Eastern. Welcome guys. It's Tuesday morning, May 21st. Thank you everyone for joining. We're just wrapping up a long weekend over here in Canada. We had fireworks last night and it was a crazy long weekend over here in Canada. So welcome everybody. We're also coming off of European bank holidays on Monday and Canadian bank holidays. And now we're back into the markets. How is everybody doing? Welcome guys. Thanks for everyone joining on Zoom. I appreciate all of you guys. Welcome Mike, good morning. Trevor, good morning. Mr. Lee, Grand Rising, welcome. Trevor, Gold told me I'm not allowed to have any more money today unless you say it's okay. I like that. Just play your daily goals, and if you are gonna go a little bit more, make sure you secure a good portion of today's daily goal and continue trading if you are, but limit the risk and so that you don't lose that. Okay, it's amazing. I hope that everybody can get to a situation where you are too, hitting daily goals and continuing to trade, but also securing and just risking a little bit. Okay, and the name of the game is compounding, guys. Compound, and that's how we can grow these accounts. It's going to take time, over time. That's the compound effect, but you'll be more consistent and you'll be more disciplined with that approach, guys. Okay, but congratulations, Trevor. Amazing job. Val, welcome. Good morning. Sorry to hear about your Vancouver Canucks. It was a good comeback last night. I thought maybe they were going to tie it up in that third period, but Edmonton got started with that 3-0 lead, but it was an amazing year for the Canucks. To me, it didn't matter which Canadian team would go on, either Vancouver or Edmonton, as long as it wasn't the Toronto Maple Leafs. So we'll see, maybe next year. Welcome Miguel, welcome Dennis, what's up man, how are you? And everyone on YouTube, thank you guys for joining as well. We appreciate all of you guys. Sahin, welcome brother. Johnny, thanks for joining, getting ready for earnings tomorrow. Yep, we'll talk about that. So tomorrow at 4:20, ironically, perfect timing, Nvidia is going to be releasing their earnings. Okay, so we'll talk about that really quick. Welcome Hardy, thank you for joining. Sajad, Andrea, thank you guys. Sherry, welcome. Thank you so much for being on Zoom and YouTube. I appreciate you. Ariane, welcome. Okay, guys. So let's get into the markets. Let's get started. Right over here, I have Bookmap on the right. Okay, so this is a live depth of market platform. There is other platforms available. You don't need to just use Bookmap, what we use here. But what this is telling me, it's a live futures data. It's telling us the transactions, the depth of market. and we use this to complement our trading on TradingView over here. I have it on gold right now. On GC is the futures ticker. We're getting all of our data from Rhythmic, and we're using COMEX market. So that's what we always tell you guys about. If you're trading commodities, whether it's like precious metals like gold, silver, and the others, if you're trading anything to do with precious metals, they are traded on the COMEX exchange, so that's where we're getting our direct data from, our feed over here. We are currently above the VWAP, this white line, which is the volume weighted average price line. It's very, very similar to like a moving average, whether it's a SMA, a simple moving average, or an EMA, exponential moving average. But this gives us a little bit more data. It incorporates volume and price, so it's kind of like a nice little 2-in-1 indicator, and we are currently above it right now for gold. I have it on the 15-minute time slices, so we're running over here 10 a.m., 10:15, these vertical dotted white lines, 10:30, 10:45, and we just started our call right here at 11 a.m. Eastern, okay? And this is our depth of market in the current order book. All of this green stuff below us here, these are the bids in the market, and all of the red above us, these are the offers in the market. And we also utilize a heat map, so you can see right over here where my cursor is at this 2436, you can start to see that there is a little bit of heat there. There's a little bit of heat above us. So what that's telling us is there is liquidity above us. So are they going to come up here, sweep the highs and fill in those orders up there and maybe start to move it down? Or are they going to actually come up there and transact up there, and then maybe those are a lot of buyers waiting to get into the market up there, and maybe gold will continue making higher highs, higher lows, okay? And we are at a critical resistance point for gold, as you can see over here on TradingView on the 5 minutes. We are at a nice double bottom, and this is the neckline that could break out with an impulse move. It could break out, maybe close above, retest. So some things can happen while we're on this call. If you are trading it, just be careful, because I'll be going over news and then I'll be doing a top down as maybe it's breaking out, so I won't have enough time to just enter the market. But if you guys see it, just remember patience, discipline. If you're feeling something out, go a little smaller. If you're speculating, unless you're 100% confident in the move, you could have been building the move down here, and maybe you will get that impulse breakout. US30 on the opposite side over here, US30 Dow Jones, we kind of reached a little bit of resistance up here, and then it's starting to retrace back down, okay? And then we'll also look at US30, okay? So we'll do 2 charts today. Gold, you can see transacted right there with that big liquidity, that big offer up there, and you can see that they're kind of pulling all of the offers. A lot of transactions. That's that big bullish candle that's breaking through all of this resistance currently as I'm speaking, and we'll see when it closes in the next minute and 10 seconds. Where will it close? Already, guys, like, look for real quick right now, where's your kind of resistance? It's kind of right over here. That's where it broke out, retested, body. So you can see any retest, if it comes back down to 2430, we want to see if it will hold as support going forward if it does close above. Maybe the volume, you can see it already before it closes, about 50% right now open where the volume is. Half of it is right around there. So it's just giving us a little bit of a zone. I know I haven't done any top down. I haven't even looked at the higher time frames, but what I'm looking at is just right now, as we started this call, like, we can clearly see that there is a good support level. That's what made the double bottom, if you guys can see it, where it came down this leg, one bottom, there's our neckline, it came back down, second bottom, nice bullish candlestick printed there with 3 nice equal rejections in the green box, which is allowing our W, and then now we're getting our extension, the impulse break on this green candle. But when it gets up there, remember, there's more supply up there. It could come right back down, and what I'm saying is if it retests this red line or just below it and it holds, then maybe we will continue to consolidate up here, maybe make a flag, maybe we'll continue in upwards momentum, okay? And then also look at the way where it closed and how the next candle opens. I know we haven't done the top down, guys, but I just want to break down as I see a play, because I know some of you guys are already in this. See how we close right near the high, and so naturally the candle should open with momentum, which it did, and we can break that wick and start to drive up. See the top of my chart, because I haven't done any top-down analysis. I have no idea what's up here, so we kind of got to look left to the chart real quick, and you can see that that previous high wick right there, that's what we're trading into, 24.33. I will erase everything and we'll start fresh, but I'm just showing you real quick right there what we're trading into. So you see it traded right into that wick at this was Monday, May 20 at 21:25 military time. So we just traded into that, and then above us there's our next levels. Like if I'm looking to place a red box, maybe up there, that would be where my red box would be, because that's where it got rejected, the market, and pushed down. So that's around 24.37. And where we are right now, that would be about 40 pips away to continue to fill into that bigger zone. So you see how we opened, small pullback, it didn't trade into. So if you already were looking, where's 50% of the candle? You see that wick right there, and then use that red line as reference, that wick right there, and that would be kind of my green box going forward. We still haven't traded into this green box. It's still just this little spin top candle that's trading right here. So we did break out, now could come down. So now when I'm looking for, sorry guys, I'm talking so fast here, but I'm just trying to break down everything while it's happening live. This is where now I would draw my consolidation box and look for maybe if it's going to flag in here. Remember what I said just before this move happened was once we break a certain resistance that we've had a difficult time breaking for the majority of this morning since Wall Street 9:30. Now it broke above, but now it might need to trade sideways a little bit, and that's what is considered a bullish flag pattern. So we continue to consolidate here and then maybe continue to make its highs. If you're trying to short this move currently, it's a very tough situation to be shorting this currently because we still have a lot of bullish momentum in that candle. We have that nice double bottom that broke out. It's still respecting this area, so it's very difficult to short this thing right now. We have no break of any structure or anything. This is continuing to be maybe a strong bullish move that might fill up to, remember what I said, 24.37 could happen up there. Now you got to start to see what's going on. There was a big sharp rejection right there coming back down. So there is some sellers up there, but the buyers are still holding very, very strong. So this is where it might consolidate. Coming up green, come back down red, maybe go up green, maybe come down red and try down here. But that's quick trading in a little nutshell, just on the 5 minutes. But is anybody in gold buys right now? And is anyone trying to sell gold right now? Because then that also helps me with the analysis. I know who is buying, who's selling. I can kind of break down the markets for you guys. I'll look for trades myself. I'm not just going to sit here and just commentate. As much as I love to do that, I love commentating. I love breaking plays down, but I know why you guys are here. You guys are here to look for entries and things like that. But I'm not going to enter the market without doing a top-down analysis. I'm going to kind of stick to my principles and my discipline. So I know it sucks, guys. I'm going to get off these charts, and I know that we could just continue breaking down gold right now, but we've got an agenda that we need to get done. We still got to go through the news. I don't know what caused this move because I haven't looked at Forex Factory right now. I don't know if there's speakers right now. Like, you see what I mean? I like, if we fail to prepare, we're probably preparing to fail. So if you guys are already in the trade, please monitor on your own, and I will come back to this. Maybe it might still be consolidating, maybe it might be breaking out for new highs, but keep an eye on this level, guys. I kind of mapped it out for you guys. Keep an eye on what goes on here. Could be that consolidation, and maybe it could continue breaking out bullish. We just got to see how the depth of market develops. I will leave Bookmap over here for gold while I'm going through the news and doing the top downs, and then once we get over to US30, then I'll switch over. Okay, are we all good, guys? Sorry, Ron is talking fast. I had a busy morning. I got up from 6 a.m. I'll tell you real quick my day. 6 a.m. I started scalping the markets pre-New York. 8:30, get the kids ready, take them to school. 9:15, I had to be at the Ministry, MTO, Ministry of Transportation, Ontario. I had to get some stickers for the cars, pay for those. The lineup was through the door. You got to wait there. I don't know if you guys know how the ministry works where you guys are from, but you got to spend an entire day there. It's a government building. they tend to work a little slow there, and then come back. I didn't know if I was going to make it on time for this call, but we're here. So it's a busy morning, and I've chugged 2 coffees already. So you see, guys, that big rejection, bearish candle coming down. Now we're coming right through. So we're testing now that green zone. Let's see if there's a wick that forms there, may come back up. But if this bearish candle closes back below here, you can see that the sellers, that was kind of like an impulse break, and this is now what we're looking for, confirmation for a retest. So if it closes below here, go through the drill, guys. Flip your green box to red, because then the green buyers might come back up. It might get rejected in the red box, and it might turn to some supply and continue pushing down. So you see that that was a 1 bar, 2 bar breakout, and this is where I'm looking for the retest to continue to take a buy. And you see how this area failed for the buyers. Do you guys see what I mean? And that big green candle that broke out at 11 a.m., these 2 bars are kind of like a dark cloud cover that came, look at where it opened, and now it picked up a big wick. So we're going to see now if the gold buyers will continue to ask to trade up here near this green box, or sellers will continue to push this down. That's why sometimes if you get this candle that breaks out, like if you bought the second bottom here, if you bought anywhere in here, or maybe you were building from here and here, that's kind of like your candle on impulse, where you can start to scale out because you're going you're with that momentum. So that will kind of like finish off the move for you. Sometimes I like to scale out profit if I'm in down here with a candle like that, because again, there's no guarantee that this is going to continue to break. But right now it came down, it got really nice respect right at where that candle opened, and good rejection. But let's see again where it will close in the next 3 minutes. It could possibly come back up green and close back in here, then maybe we'll continue breaking out of there. Maybe they just came down there, the shorts covered their positions, and then the buyers are continuing to ask and take this back up here. So that's the beauty of reading candlesticks, is you don't always have to be in every single trade on every single candle. I know it's exciting, but just watching these things provide so much information. Look at that, how it just came down and that big rejection. This might even close as a bullish pin bar or a hammer candle in the next 2.5 minutes. Then it came down there and grabbed all that liquidity, and this might continue moving in the bullish direction. So just paying attention to candles, even whether you're in a trade or not, helps give you a lot of information. Then you put the couple pieces of the puzzle together, and then you can make a more informed decision on where the market is moving. Okay, so guys, I could talk about this all day, but we still got to go over some news. Okay, so I apologize. Just pay attention to what's going on your trading view, but I got to get to the news. So Forex Factory, let's get into this. And I'm sorry, this should have been done earlier, but this is how trading goes. You know, I can't plan for these things. When there's a beautiful setup, you know, you got to break it down and just talk about it. Okay, so what have we had today? So remember what I was just saying. Yesterday, Canada and Europe had bank holidays. Now everything is open up. Wall Street is open. Toronto Stock Exchange is open. The German market is open. Everything is open. The London, England market, everything. So we've got a lot of liquidity in the market today. We had European news already. We ran into some Canadian inflation news over here. So inflation is kind of cooling down here in Canada. You can see the red numbers over here. CPI year over year is decreasing, which is a good sign. It's great. I live in Canada. I'd like to see inflation go down. I'm sick and tired of spending crazy amount of money at the grocery store. I'd like to see prices go down myself, but it takes time for this to happen. It's not an overnight thing. And then we have speakers over here. So 9 a.m. Did everyone pay attention to FOMC member Waller speaking, FOMC member Barkin speaking, FOMC member Williams speaking, FOMC member Bostic speaking. So a lot of members from FOMC. I know it's not Powell speaking, but these are still important chairpersons over here speaking. We got to listen to what they say. I told you guys, the snipers in Zoom, in our Discord channel, we have the Financial Juice running, the bot running 24 hours. Will give you information. So I'll scroll to it. I'll show you guys. And if you don't know what Waller, Barkin, Williams, or Bostic is saying, there's going to give you a brief summary of what they're talking about, and that might make some decisions in your trading. And over here, we also have at 11:45. So in the next 30 minutes, FOMC member Barr will speak during our call in the next 30 minutes. 1 p.m. Eastern, when we kind of finish up wrap up our call, UK, we've got some British Bank of England Governor Bailey speaking. So if you're trading anything to do with the European markets, this may affect something. It's a red folder. Pay attention and just be aware. And then we move into our Tokyo, Australia, Sydney session. There's New Zealand later tonight, 10 p.m. Eastern, has a lot of red folders if you're trading the New Zealand dollar. Okay, and then just going over tomorrow real quick. Just you got some UK news pre-market, and then we move into our FOMC meeting minutes tomorrow at 2 p.m. We'll be trading ready before this. This is not the FOMC session. This is just the minutes, the recap from last month. Okay, so moving over to earnings real quick. We had some earnings before the market open Tuesday, May 21. Lowe's is one of our big box retailers. I always tend to follow Lowe's, Home Depot, these big box retailers, because they're do-it-yourselfers. They're the guys and women that are renovating their houses, fixing up, and things like that. Retail spending it's down. You can see the growth is down. So with today's market, with all of the inflation, with everything that's happening, a lot of people are not doing home renovations. You can see that they're purchasing new homes and things like that are down. So I like to look at the do-it-selfers over here, Lowe's, Home Depot. I like to see what Costco, Walmarts are doing, the bigger box stores, Macy's retailers over here. And is there any other big names that we should be looking at over here? And then after hours today, we go into our after hours. We've got Toll Brothers, Urban Outfitters, Modine Manufacturing. Again, I look for those big names, or the securities that I trade, which may affect the index I'm trading. Tomorrow, guys, I just want to make note of after hours tomorrow, Nvidia. Make sure you pay attention to this company. This is one of the biggest ones. So they're at pretty much all-time highs for their security, and they are a big driver in the markets, specifically S&P and Nasdaq over here. Nvidia Corporation Wednesday after the close at 4:20 p.m. Eastern. Big growth. We'll see if they can carry that momentum and continue pushing the markets. Okay, and then also not just the numbers that come out. Listen to forward guidance. Okay, if you can listen to the conference call, if you can listen to what's going on, or get a summary of what's said. Investors, traders are looking for what are their plans in the next quarter. What are their plans for the next 3 months? We kind of know everything that they've been doing so far, but what are they planning? What are they forecasting for the future? That's what we need. We're futures traders. We want to know and be ahead of the game. So listen, guys, because even if you don't trade Nvidia, they are still a market mover. So you want to pay attention to what they're guiding in the future. Maybe they're saying it's going to be really tough. It's going to be and then that might be an opportunity to maybe look for short position and sell Nvidia. They might be very optimistic and have a lot of things in the pipeline, and we might continue moving to all-time highs and maybe hit $1,000 a share for Nvidia. It's very, very close there. Okay, so just continue moving forward, guys. Our Discord over here. I'm just going to go over a couple signals that were sent out over here. And did anybody pick up on crypto over the weekend? Big pump for crypto. Ethereum looks like Ethereum might be getting their spot ETF. It looks like they got a note from SEC to accelerate it. So that's big news, guys. That might be a very, very good news for crypto. All of the shit coins are up. Pepe is one of mine. I like Pepe, the frogs, or Pepe, however you guys want to say it. But they're up, and Bitcoin almost hit all-time high again. 73,000 all-time high, and we hit about 71 yesterday. So it kind of sold off from there, but maybe consolidate up here, and who knows? Maybe next push, we should see 75,000 plus on Bitcoin. But yeah, just paying attention to news in the markets and things like that. And Guys, just a few things. A gold signal that was sent out today, just right over here at 7:08 a.m. We're looking for buys above 24.22 to 24.20. This is the chart. So we kind of already got the volume closing above. We're looking for that shooting star candle to maybe come down, maybe retest this area to look for an entry, and look for your entries above here, okay? And then just continuing to follow the move. If you see right here, it did continue to push down into here and come back up and start to close again. So there could be some entries you're looking for 24, 20, 22 area here, and following gold and its pattern it's making, and then it started to physically break out after a couple retests right there. There's your retest candle, nice candle closing above, and we start to break the previous resistance points at 24.22 and start to really push for approximately 100 pips, and you could be physically done for the day with a trade idea like this. And that's all it takes, guys, is just being patient, disciplined, waiting for the play to come to you. Yeah, some days you make a mistake, you know, it's normal, that's trading, but overall, if you continue to stay disciplined, you might do really well. Again, here we're looking for buys on US30 above 39,970. We allow it to come down in here, pick up the liquidity, and then start to get that volume closing above this area. Couple retests, any one of these you bought, maybe place your stop loss down below structure or 50% depending on your risk tolerance, and it came right back up to the resistance points, had a little bit of a break and then a retracement, and that move was good for 110 pips. Again, that's enough for a daily goal, and you could be done for the day. You can use these to complement your trading, your charts, and use it as another indicator or confluence if we're looking for buy setups as you are. And then you also get updates and trade management with these. And then when you go up, go through the rules, go to a break even, start to put a trailing stop loss in the market, start to scale out, but you need to figure out what's best for you. Okay, so those are our signals provided. If you want a signals only membership with SST, we have that, but I encourage you to join the entire team and not just get the signals. I encourage you to join our Discord with the other snipers in the group. I encourage you to learn with all of our education we provide here with the weekly webinars, courses, and boot camps. And I also encourage you to join all of our live sessions in London, Wall Street, and post New York, and our Tokyo's coming next week. So guys, this is our free Telegram channel. It's pinned at the top of the YouTube. Thank you guys for everyone joining on YouTube. I appreciate all of you guys, almost 200 viewers. If you guys can hit the like button, subscribe, and also if you're new here, join the free Telegram that I had pinned at the top of the YouTube channel for you guys. It shows everything that we do here. We're very transparent with what we do here. SST Scalper Pro trade idea recaps, our trading schedule for the week and for the day, and everything we do here with promos, giveaways. Right now, here's a good little 3-month discount for you guys. We know inflation is high. We know that everyone is struggling to make ends meet, so we're trying to give you guys a little bit of a promotion right here. So use this coupon code and you get a 3-month with all of our everything we offer here at SST. Okay, and these are our links: stocksnipertrading.com. This is our YouTube channel. Thank you guys for following, subscribe, and notifications and all of that stuff. And over here, guys, some traders are interested in an expert advisor, an EA. This is our SST kill shot. It's available here on MQL5. If you click the link, this will direct you to our SST kill shot. There's a lot of information provided here. You can download a free demo and test this out if you like, if you have experience with EAs. If you don't, we also have a Telegram group dedicated to this to help answer all of your questions with a developer who's there 24 hours a day to answer all of your questions and help you out. Okay, let's get into this, guys. Let's get into the charts now. Going to looking at gold. We'll start off with gold, and then we'll make our way over to US30, and if we got some time at the end of the call, we'll also do NASDAQ. We'll take a look at what's going on. Okay, so you can see now with the gold, okay, you see how kind of broke out and then came back down. That big candle closed near, like with a bullish pin bar, but again came in the consolidated box, then they closed it below. And then if you flip the green to red, right there, you see the retest, and you could have took maybe a quick little scalp sell where it came up, broke, and then maybe you were in that candle alone. And if you're looking for 10, 15, 20 pips, just like on a single candle, there it is. That's a 25, 26 pip candle. So you see how it closed below, it came up green, it broke. You can take the break at the body. That's why I usually like to take trades at the break of the bodies. And then I could have gone up right away, got my 10, 20 pips and been out. And then maybe there's a green candle coming right back up. That could go down. But sometimes when you're scalping individual candles, remember, you're scalping individual candles. So you got to have that discipline to get in and out maybe on a single bar. And yes, it could continue to push down like that, but this all has to be part of your trading plan, and no woulda, shoulda, couldas. Okay, so I'm going full chart, gold. We're going to get rid of everything that we designed here, but do you guys understand why I drew that zone right there, and then with the volume closing below, why I just flip it green to red, and now it's pushing down? It might come all the way back down to this zone. You see, I didn't change the zone, I just stretch it across, and it could physically come all the way and touch the zone and maybe go back up. It could close below the zone, then you got to go do the same thing, flip it red, and then it might retest, might consolidate, and maybe drop down to fill that wick, and maybe come down to that next supporting level right there at 24.17. We could find all our buyers right at that green box, and then all of a sudden these short sellers are closing their position there, and the buyers are waiting, and they're bringing it right back up, and then you can stretch that zone again into the future. Okay. Maybe it doesn't come all the way down into the green box. What happens if it forms maybe a higher low, like somewhere right here, and finds buyers at those previous wicks right there, and maybe right there, and then it protects the depth of market where it doesn't need to come into this bigger block right here. They kind of will come right into this screen and then bounce off there and try to come up. Okay, there's various things that can happen, but we got to allow the volume to come to the areas to make a decision. So we can see right now gold just broke below the VWAP, volume weighted average price, and we'll see if the buyers can continue to ask at the VWAP or above it, and maybe continue to hold the gold trend, and maybe continue to make it go up with a higher high. Okay, so I'm sorry guys, I'm going to get rid of everything because we're going to start fresh on the daily, see how everything is moving. If you guys are in the trade, whether you bought or you sold, I just hope you guys are managing it on your own. Okay, so overall, I just want to go through Zoom chat. Did I miss any questions or anything? No, you guys are talking about Orlean Punky. It's the best meme coin out there. Okay, but let's get into this daily analysis now. Okay, so I'm not on those 5 minutes. Those 5 minutes are moving. I'm on the daily now. So you see this candle is the full day's candle. We still have 5 hours and 30 minutes to go. Okay, so lots of time left on the daily. We can start to see where we're moving and where we could possibly go. So overall, if I told you that these were 5-minute candles, just like how we just did with that 5-minute chart, does this not look like an area where it made a physical bottom in the past? And maybe we stretch this out into the future. Okay, we're nowhere near this box, but again, the market could come down here, and we want to be well prepared for it if it does. This was the previous all-time high up here at 24.30, that red wick. And if I start to maybe look at this little zone right here, from this wick to that wick, it was in fact red there in the past, where it came up, all-time high, got rejected, came up again, lower high, got rejected, then the big bearish candle pushed this down. So if I stretch this zone across into the future, we are trading right into this today. Will the volume, green volume, in the next 5.5 hours of gold close above here, and might have some momentum still this week to maybe fill that? That's the new all-time high at 24.50, and maybe we make our way up to, again, price discovery. So I have no idea when it's all-time highs. The way how I do it is I use my quarter increments. So from 24.50, next logical area it would possibly go to is 24.75, then to 2500. Obviously that's our whole number, psychological number. Then from 2500 go to 25.25, 25.50, 25.75, and up to 2600. Unless you have a bigger outlook. Maybe you're holding gold for the next couple of years, then you don't need to worry about these. You need to look at 2,500, maybe 3,000, maybe 3,500, maybe 4,000, just depending on your horizon. Right? So if I hold gold, like I hold physical gold, my physical gold I kind of bought at 1600s. I'm not looking to unload right now. I'm looking for 3,000. I'm looking to hold that physical gold for maybe a couple years. Maybe 3, 4, 5,000. Who knows? Whatever. I don't know what will happen in the world, but that's more of a long investment. But when I'm scalping the markets, I might be looking for shorter moves. Okay, so it's all about the mindset, right? You got to have the proper mindset for the proper time frame you're trading or investing, so that you know what you're doing in the market. So I don't turn an investment into a scalp, or I don't turn a scalp into a swing trade or an investment. Some traders do that, but that's not my plan of trading. Does that make sense, guys? Because Ron likes to talk a lot, but make sure you understand what I'm saying. Okay, so you're not confused with what you're doing. Okay, so let's follow these daily candles now. Okay, so we can see when we reach this bottom, there was a little bit of barcoding, red, green, red, green, red, and then we started to push out of here, closing strong, pull back. You can see that there's another level right here we're holding, continue to break out, pull back. It's creating again support. You can see every support level is 50% of a breakout candle. See that big breakout green candle? Right there, half of it is right there, 23.75. Again, this big breakout candle, half of it is right around here. The pullback was generally in the 50% area and continued to push up. We broke through here on Monday, start of the week yesterday. So that is our new all-time high. We can place, let's place a yellow line up there just as a point of reference for our new all-time high up there. And we'll see, maybe we come back up and trade at our all-time high, or it will be a lower high and push down. So we came up there yesterday, we hit our all-time high 24.50. There was some selling pressure that brought us right back down where we closed at 24, 26, 27 area. And then let's follow into our daily candle today. It opened up right here, and it was originally very bearish where gold sold off, red, red, red. We took out Monday's weekly low, and we created our own low at 24.07. So I'm placing a purple line at our low of the day right here, purple line for the low of the day, and then I start to look below the purple line right here. So now I can start to see a fair value gap, whatever you guys want to call it. And I'm not about the definitions about what it is, but just look here, common sense. The low of the day is our purple line, and then we have the big bullish candle. You see how there's a little bit of an imbalance in that volume to this high wick right here on Thursday, May 16. You see where it came up and got rejected right there. Okay, you guys see that? Make sure I know that you guys say yes that you see this, or no you don't see that. So Ron is going to place now a zone at the purple line to that wick right there and make it green. Let me know if this is confusing or you guys don't know what I'm doing. Okay, you guys just see what I just did right there. It's not complicated. Like, this should not be complicated. The way how I explained it, maybe I explained it in, you didn't understand the way how I explained it. But just look at the concept. Today we came down red, 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 red. We stopped right there. It's almost a tweezer bottom low lined up with yesterday's low. So that's what my purple line is. And then you see the next time the volume came like in here, it came right there on this day, Thursday, May 16, then it got rejected. So this green box, this body of volume, has been untapped. Untapped. You guys know what untapped means. It hasn't been executed. It hasn't been triggered. It hasn't been traded into yet. So those still might be pending orders waiting in the market. Pending, that's the word what pending means, waiting in the market to get activated. At when? Well, it missed it today, maybe tomorrow, maybe Thursday, maybe Friday, maybe next week, maybe next 2 weeks, maybe next month. maybe next quarter, maybe next year, right? So I don't know when. I wish I knew when gold would come back down, but I don't. But as of now, what I know is it got rejected right there. So you see, next time that it might come back down red down here, maybe the buyers are waiting there. There might be a big block of buyers, and then maybe they push it right back up. But however, maybe the buyers see that the red is coming down with a lot of supply. They pull their bids. You know, when we have, like if you're trading with orders, pending orders in the market, I tend to do market executions, but if I put a pending order in the market, I might be sitting there. I can cancel it at any time. If I see that I'm a buyer, but I see that the red volume is coming down hard, I might just cancel. And then if more people cancel, they're pulling their bids. And it allows maybe the sellers to push it through here, maybe close below, and then the buyers are buying it back up. Then that's when I flip the zone from green to red. Maybe it gets rejected, and then maybe we're starting our push to the downside. Does that make sense, guys? But I gotta wait for volume to come into this green box in order to make any decisions whether I'm buying or selling. Okay, so right now that's holding, and you see how I just brought it into the future. Okay, this now what happened? It came down. That's where we picked up all our bids this morning, and gold came all the way right back up to where we opened in that. So what I'm going to do is, just as a point of reference, so I know where we closed yesterday and where we opened today, it's approximately 24.26. I'm going to place a yellow line right here. Okay, and that's to tell me if we come back here that that's our closing yesterday and our opening price today. We're not too far away from it right now. We're only 20 pips away from it, but we're still holding some bullish volume above it. So when we continued to push all the way up there, and that's our high of the day. 24.34 is our high of the day, and we got rejected up there. So I'm placing a purple line at my high of the day. So I only have two purple lines. One is the low of the day. The other purple line is the high of the day. All of these other yellow lines I have, you can see the significance of them. I'm just pointing out our all-time high up here and yesterday's high, 24.50. This yellow line is where we closed and where we opened today. If we cannot hold this yellow line, sellers may push it right back down to maybe this area, okay, right around here. My next yellow line will be here. I want to know where we closed on Friday and where we opened on Monday, around 24.14.15. So I have another yellow line right there. If it comes down red all the way down, maybe it's still holding this uptrend. If it comes down red, maybe buyers are waiting right there at that point of interest, at that daily area, and maybe they're going to buy right there and hold gold to continue to come back up. If we cannot hold this area, it's got a high probability we're going to come back down and test the weekly low or today's low, and then we'll be trading in our green box, and we'll see if the buyers are waiting in here. If they're not in here, then it's going to drop a little further. Where? Down to here. You've got a closing price, an opening price. That would be my next yellow line. And I just continue to do this. If I wanted to do this all day, I could continue to find all of my gaps. I could find all of my point of interest. And I could continue to. I found another fair value gap right here. See the wick coming down? And then that kind of wick right there, that most recent wick, right there, there's a little bit of a gap in the market. I could draw another green box coming across right there if I wanted. This gap in the market on that big bullish candle. You see that? See that the volume right there? The gap right there to there. And have we traded into this? No, it almost came down. So you see there's another green daily fair value gap. Stretch it across into the future. Do you guys see how I could do this all day, get my charts ready for the entire week, for the entire month, for the entire year, and just trade the volume in between these levels and be very patient and disciplined, allow the volume to come to me. I do fresh charts with you guys every single day because we get new traders on the call every single day. But if I was never ever trading with you guys, I would leave my chart like this all week. I would tidy it up, clean it up, because maybe we'll be trading up here today, maybe tomorrow we're trading down here, maybe next week we're trading down here. But my levels are all static. They're all ready to go. You guys got that? Okay, so sorry I'm spending so much time on this, but it's good review, it's good education, guys, to learn this. So what happened with today's daily candle? Just a recap. We opened, it was initially bearish, we came down here, low of the day, weekly low, tweezer bottom lows, we got our fair value gap, bullish gap below us. It continued to come right back up, but you see we couldn't continued to push for the all-time high. So we got rejected and they rejected us. Now we're just kind of consolidating right in here. Okay, so now what I do is I break down this daily candle into the hourly, because now I want to see, I don't know now, like when I'm looking at that daily candle, I don't know the exact time when we hit the high of the day, when we hit the low of the day, where the big move was. Now I can visually see on the hourly candles when everything happened. Okay, so it's originally was bearish. Let's see the all-time high. When did we hit the all-time high? Monday at 1 a.m. And then pre-London, Monday, 2 a.m., they brought it down. It came back up 5 a.m. and then here's the push down. Monday, 6 a.m., 7 a.m., COMEX, they flush it out. 9 a.m., Wall Street, they bring gold back up, but it's a lower high from the all-time high, and it pushed down right here. At the end of the day, this is power hour, 1500, and then we traded into the Tokyo channel, and then going into futures market 8 p.m. and then they continued with the trend going down 9 p.m., 10 p.m., 11, then it consolidates midnight, 1 a.m., 2 a.m. London now. Here's London's big session of volume where it was near the fair value, that hourly fair value or the daily fair value zone down here, and continued to push right back up. And then we came up again this morning, 6 a.m., 7 a.m., 8 a.m. COMEX. Wall Street had a little bit of indecision at 9. 10 we came back up, and then here we're on our call together. This hourly candle is going to close in the next 19 minutes. We came up and we kind of tapped into the high of the day and it got rejected. So you see the yellow line now. The yellow line I could use as reference for where's this hourly volume going to close. Is it going to close below the yellow line? And then maybe we'll continue to sell down in here, or will it hold? Now we're just consolidating. You see green, red. From the yellow line to up here, maybe it's just going to continue to consolidate here. We can still trade this area, because now I look from the yellow line is 24.26 all the way to the top of the red box 24.31. That's a $5 move, 50 pip zone up and down. I can still scalp for 10, 20, 30 pips, or I can get the full 50 pips up and down if the 5 minutes are trading like that. So you see right now we're struggling inside here. What is the next move of gold? It could continue. Like if we look at the hourly, we came up to the all-time high up there. We came back down, found support there. We came back up, lower high. They pushed it right back down to this area, general area here of support. Then we came back up and we got rejected. So it's getting rejected. Are we now going to push this next leg to come down to here or back down to our support level? Or is it going to consolidate here and then the buyers are going to try and bring it back above the daily high purple line? We retest it, then look at how much room we have to get back up to that all-time high and test it again up there. Okay, so right now on the hourly, it's trading sideways. Okay, but inside here, so we got to wait to see the hourly direction. Right now we found consolidation, we found our neckline. It might trade in here sideways for a couple hours. Now when we go to the 5 minutes, now these are our 5-minute bars. These are the ones that we can scalp. We're going to try and maybe get 10, 20, 30 pips, but maybe a maximum of 50. Because now when I look from the top of the red box to the yellow line, I get my ruler, measure the zone from right here down to the yellow line. You see how it's approximately 50 pips. And then the 5-minute candles also make structure as well. So I can start to see the structure they're making. So we came up there. See, it was kind of a fake out up there. There was a fake move up there where it closed near the high of the day. And you see how they kind of, the sellers faked out the buyers. They sucked them in up there and moved the market away from them at the high of the day. So this is not, this doesn't mean that the bears are like in control of the entire day. No, the buyers are still in control. You can see the 5-minute candles are making that wick right there, higher low there, higher low there, higher low there, higher low there, and this essentially is a higher low zone. But right now, the momentum is on the sellers. So you can see that they broke it down, came back up, pulled back, lower high, a bearish engulfing candle, continued to push down. Now, where could we find some support? Let me just get rid of the red box here, and then we're going to focus on here. So our 5 minutes, I can see a little bit of a zone right here. Here was one physical pivot top, okay, red right up there. So the reason why I'm placing it right there is because this long bullish leg stopped right there. You can see it just stopped. So if I bring this zone across, I can see right there where this was a big green impulse candle that broke out of that red zone and then closed back below. So I need to continue to stretch this box across. Now you see that the green candles right over here at 7:55, 8 a.m. broke above it and held. So then I got to make my zone red to green and continue to bring it across. And then I can see that they impulsively broke it down at 9 a.m., kind of covered the positions down there, and continued to push up. Now, if I stretch this green box across, you see that we almost came right into it right now as Ron is speaking. So I found my zone. I'm going to continue to stretch this across into this afternoon. And if it can continue to hold, maybe we might look to buy this bottom. Maybe we'll see now if it can consolidate in between the green box and the yellow line. This is where I can trap it now to see how maybe if we trade sideways in here or if the sellers are going to continue to break it down. But when we broke down this area, you can see the big rejection wick right there and then continue to start that move up. So right now, like if you're in a short position, again, you might want to consider maybe scaling out down here, because the buyers, when we look in the past, this zone used to be resistance, volume closed above and made it an area of support. We had that breakout candle at 9 a.m. and it came right back up. Wicked. I don't see any red volume closing below here, so it's still strong bullish momentum. And we just almost came all the way down and tapped that, give or take a little bit, but we got rejected and now it's kind of spin top candle. So what I can do is I can physically wait up here at the yellow line at that daily point of interest for 5-minute volume to come back up here, maybe close, retest it, and then maybe gold is gonna, first thing it goes to, before it's gonna go to the high of the day, we gotta test this structure right here at 24.30. That's where that big red engulfing bearish candle printed right there. We cannot neglect the fact that we're going to go up to the high of the day and break out. Yes, I would love that if I was in a buy. But first of all, we got to test this area. We got to test our consolidated zone. Then maybe we have enough momentum to get up to the high of the day and maybe have a physical breakout above there. Maybe it doesn't even get up there. Okay. Do we have any fair value gaps, bearish gaps on these 5 minutes? Right here. See where that big red ignited candle started? And it came down, and then you see the next retest where we came up green right there. See that big body right there that again has not been tapped, untapped. Okay, so what I do is same thing. What I do, I'll get rid of that one so this one doesn't confuse you, and I'm going to make that zone red. Okay, so I'm going to go with the red volume that started at this high of the day where they rejected the move. So maybe the buyers will continue to bring it back up here, but you see how now I found a red zone that has not been traded into. So that could be where the big heat is in the market. So the supply might be right there at 24.40. If I didn't have Bookmap, that's how I would figure out where the supply is in the market. So you see how it came back up. Okay, this is why I use 50% rules. Open, close, half of the volume is right there. See how the green candle came up, green, right into about half of it, and then got rejected, and they pushed it right back down. But you see how it's not making any new more lows, so it's kind of like a spin top candle, because the market is getting to a critical point where the buyers can step in here, sellers could step in, but right now it's kind of like a tug of war between the buyers and sellers right here. So maybe I got to wait patiently. So if I'm looking to scalp like a buy, up to there, like above this wick, just to come up to the top of that red box, I measure the move, because I know that maybe it could come up green, go up for about 30 pips, and then get rejected inside that red box, and then come tumbling right back down. Unless the green candle can cut through here, close above, and then we flip this depth of market, maybe we're turning green, and we have enough momentum to build for the daily high. Does that make sense, guys? How I figured out these zones, shouldn't be that complicated. Okay, I'm trying to explain it slow so everyone will understand. So now you see the shooting star candle coming down with 60 seconds to go. So we still have a lot of bearish momentum that may break this area. It may break. We might get a physical wick come down and go back up, just like at 9 a.m. right here. But if we get a red candle close below, this thing could continue pushing down. Look at it pushing down right now. So they're trying to eat away at a lot of these bids right now. And we're reaching a critical time in the market where we're 10 minutes away from 12 p.m. And then maybe we might get a momentum shift to come back up to the upside, or maybe we get some volume close below here, and maybe the trend to the downside is going to continue. Okay. Any questions, guys? What I do now too is I look at add some technical indicators if you want, like EMA 9. So we're below the EMA 9. EMA 200, we're right at the EMA 200. You see the purple line? So maybe there might be a false break below it. Maybe it might come back up. But this is where you got to kind of exercise a little bit of caution. We're at the 200. We're reaching a critical support level, but there is a lot of selling pressure pushing this thing down. And then I look at RSI as well. So we are below 50 on the RSI. It broke below here. See how many times it tested 50, 50, and then broke below. So the strength is weak right now. So sellers have the ability to continue to push this thing down unless there is some strong buying volume coming into the market and the buyers are asking to trade back up here. Okay. So far, our new candle at 1150 traded right into our green box. Traded into the green box and still bullish volume left in it. Okay, but we'll see if maybe the buyers can reverse it back up. We might have to find a second bottom. So I'm already maybe looking in my head about patterns. So I can see we came down. Maybe the buyers are here. We got to figure out where the neckline is. Where will the neckline form? Maybe up here somewhere. And then sellers might push it back down one more time. Maybe a double bottom, maybe a higher low bottom, maybe an actual physical grab of the low. They sweep the low. And then maybe we continue to push up bullish. Then if it closes above there, that's the big resistance we got to break. But with a possible retest, a shift in the depth of market, then we might have enough ability to break through there. And then we're coming up to test the double top, the daily high. Does that make sense, guys? Like, this is just going to be the single leg move. So with the single leg move, you've got to have a trading plan for the single leg move. It could just come down and go back up and then get rejected and rejected. So if you go up 10, 15, 20 pips, like, you got to have a plan to understand it could come up and then go back down for the actual second move. But it all takes a little bit of practice and to learn these things. Okay, you see how that candle came up green, green, green? I guarantee you it came up for 10, 15 pips, you know, for the scalpers who are trading maybe 1 minute or 2 minutes. There's a 20 pip candle. It came up there. And did they get out? Probably not. So then the market might come back down. They might be in drawdown right now. The market might break and squeeze them to make a real decision if they're, depending on how much in drawdown they are, if they over leverage their trades and things like that. So you got to kind of take it the perspective as like how the market moves, how a market maker operates, and things like that. So every time the buyers come up, there's enough supply there to absorb them and continue to push it down. You can see in Bookmap, all of these green bubbles up here were buyers. They got trapped, and then the sellers moved it away from them. Again, the buyers were asking to trade back up here, and then the sellers pushed it away from them. We got buyers, and the sellers are still trying to transact near the lows. But you can see now there's a lot of heat coming in the market here at 24.25, 24.24. You can start to see the heat building. Cumulative volume delta is negative 1600 currently, so it's still strong selling pressure. So if you're trying to buy, you're buying against a lot of supply. Okay, so this is where maybe if you're looking to buy, you're a speculator. Trade small, start a small buy. Don't go all in and trade with a big lot size, because if they continue to push you down, you're going to panic and you're going to get squeezed out of the market. So maybe if you're speculating a buy, start something small, just a small little pending order, test out to see where the buyers are, to physically get some emotion in the trade, and then if it starts to move in your direction and it's adding, the depth of market is building, then maybe you can start to build your position as well. Okay, so that's another strategy in trading, is learning how to build positions, but to build them properly. You don't build a position by going all in on the first trade. Okay, you see now how they trapped all those buyers on this candle and this candle, and now it's your elevator coming down, breaking the low. Where's our next area of support? Look at our 5-minute pivot right here. Okay, before we come down and test this yellow line, you see half of the zone from here to the yellow line, somewhere around here is half of it. But the history tells us where it dropped, that's where the buyers stepped in right there at 7:20 a.m. Eastern this morning and continued to push it up. That's where it all started. That pullback, that's what started that strong move and the retest and then hit the daily high. So you see there how it just broke, how it broke, and then coming right back up. So they tapped into that depth of market, a lot of bids in there, and then they're trading back above here. So if this volume kind of closes above, maybe we're going to start that next bullish leg coming up here at 12 p.m. And we're 5 minutes away from 12 p.m. So maybe we got to follow this candle, how it will close in the next 15 seconds, where it will close. So you see kind of they faked out the low, maybe hit those pending orders coming right back up, but the candle's spin top. It's 50-50, it's indecision, it's neutral. It came up with buyers, it sold with sellers, and it came back up with buyers right where it opened. So exactly where this candle opened 5 minutes ago, it's closing at the same spot. Yeah, there was some range, but still, that's not a solid candle to either buy or sell. There's still indecision in the market. So when I'm in a situation like this, instead of just jumping in right now for a trade, I might just wait it out 5 more minutes and see what the next hourly candle brings me at 12 p.m. Yes, I might miss out on making a little bit of a scalp or a position, but that's not the idea of this. The idea is to figure out what they're doing here. It might take time to develop. Do you guys understand? What are you guys? Let me ask you. What is your bias going into 12 p.m.? Okay, not right now. In the next 5 minutes when we get our new hourly candle, do you think the buyers are going to hold this position and gold is going to come right back up to test this area? Or do you guys think sellers will maybe continue to be the aggressor and break it down here and continue selling? So everyone's going to have a different bias. Some of you guys are going to say, Ron, I'm on the sidelines, I'm watching. Some of you guys are sellers, some of you guys are buyers. That's trading. There's got to be someone always on the opposite transaction. And you can see sellers are still in control. Look how they're bringing it back down. So if we bought that candle, we bought a little bit too early, and again, they're pushing the market down. Yes, it could come down here while I'm speaking, pick up a wick and come right back up here, and it's right back where it opened. So you can see where this is an area in the market where you might have to exercise a little bit of caution here. Okay. And then what you can do is also, you don't need to stick on the 5 minutes. We can take a look at the hourly candle. Let's see the hourly. Okay, maybe the hourly will give us a little bit more information, more insight. Okay, so if we're trying to buy this hourly candle, look how bearish it is. This hourly candle has already taken out 1, 2, 3, almost 3 hours of bullish volume. This one candle alone took out those 3 hours. So will this hourly candle close below this critical zone, and maybe next hour we're going to push down to here? Or will we get a little bit of a wick, and then the next hour, 12 p.m., gold is retracing right back up to? So if I look at 50% of the red hourly candle, it's right by my daily point of interest, kind of the yellow line. That's why I got to respect that yellow line if I go into a buy, because then the sellers might be waiting there and continue to sell it down. If I can make 30, 40, 50 pips coming up to that yellow line, then I got to be doing something up there as a scalper in the market, because the hourly sellers might be waiting for me to come up there. So I don't want to just piss away 30, 40, 50 pips. That could be my daily goal, and I'm in and out of the markets. Okay, I got to respect the higher time frames. If I go to the 15 minutes, the 15-minute candle is right here, going to close in 2 minutes. So you see the 15-minute candle still has some indecision, but we're coming down to our critical level where it broke through and coming right back up. So yes, we could have the next leg coming right back up to there, or could just continue to consolidate down here, and then we're pushing down to 24.17. Our next red line, that 5-minute supporting line, and the 200 EMA on the 15 is right there. From 23 to 17, that's about $6 move. 50, 60 pips to sell back down into there. So I stay on the 5s. Here we go. So we got a bullish candle, hammer printing. So haven't really broke this area yet. We got 90 seconds to go, and then we're going into 12 p.m. Okay, can we hit the likes, guys, on YouTube? We got 250 viewers. Amazing, guys. Thank you guys for joining. I appreciate all of you guys. Can you guys hit the like button if you enjoy this type of breakdowns? If you enjoy what we do here at SST, we appreciate you guys. Our goal is to reach as many traders around the world to help offer a free education, and we want to help out everyone as we can around the world, you know, but we need your help, guys, by growing the channel. Like we're doing everything in our power here, but we need your help as well, guys. So if you appreciate what we do, just hit the like button. Okay, it doesn't cost you guys anything, just hitting the like button. As long as you're getting value content out of what we do here, we appreciate it. Okay, so does that breakdown help you guys understand a little bit more about the market, about a little bit more about gold, like where we're trading at relative to, like, why does Ron have a green box here? Did I break it down properly so you guys understand this? Yes, I can measure the zone. So before I even take the trade, I measure the zone up and down. I'm already calculating in my head what lot size to use, how much pips am I risking, things like that. So this helps me think about my next trade and how confident am I to go into a buy, or how confident am I to go into a sell. If I'm not sure, then obviously it's common sense to reduce your size. Okay, so this is 12 p.m. We came right back up with a strong candle, but still we have resistance here on this wick, resistance here on this wick, still a lot of red volume. So maybe it's coming down red again, but we're right at that 200 EMA. So let's see quickly if we get a wick and maybe it pushes up. If I'm looking to buy, okay, if I'm looking to buy, my stop loss maybe number one should be at least below this low. So if you measure it just right now in your head, let's say for example you bought right now, okay, I'm not buying right now, but let's say I did. If I'm just measuring to that last wick, look at it, it's 40 pips, guys. 40 pips just to be below that wick. 40. So now you should be doing in your head a little bit of math. If you take a standard lot size and it goes down, you're risking $400 just in that little zone. That might be too much for your account. So if you reduce it to half lot, you're still risking $200 on that trade. If you go a quarter lot, you're risking $100. If you go a 0.1, you're risking $40. Do you see what I'm saying? I don't know everyone's account sizes here. So you need to figure out your own lot size, your own risk. But just from there, if you bought up there and you're just placing your stop loss just below that wick, it's a 40 pip zone. Why? Because there's a lot of volume in the market. There's a lot of volatility right now. That's why that zone is so big. If you're trading like a slower session, like the Tokyo session, that same setup, that same area might be only 20 pips. So you got to adjust with the market you're trading. Okay, so you guys understand what I mean by that? So if I was going to take that buy, I'm already measuring. If I'm going to have my stop loss down there, it's a 40 pips. How much am I willing to risk on that trade? So don't just guess, guys. Make this like it's your business, like you know what you're doing every single day. If it's too much risk, then reduce it. Okay? Don't gamble. This is not gambling. We're not here to gamble. You're here to make some money. Now look at it. I'm still haven't taken the trade. It came down red right into our green box. We're still respecting our green box right there. Higher low. That was the break, but we're still getting it respected. Maybe it will come back up and close near the high in the next 2.5 minutes. Maybe we'll get some asking up here. Maybe that might be where we take maybe the buy. Okay, and then my stop loss obviously will be 40 pips, so I have to adjust my lot size to incorporate that. Maybe, guys, some people use a bigger stop loss. That's just measuring the lowest wick. What if you want to be below the next zone? Now look at your stop loss. Okay, if you took the buy up there and you want to give yourself more room to breathe, your next zone down there is 60 pip stop loss. 60, not 16, but 60. No, I didn't take the trade, Victor. Please pay attention, guys. Okay, pay attention. I did not say I was taking a buy. You guys got to listen. Okay. It makes it harder for me if you guys are not paying attention. I will tell you guys, I will tell you guys, believe me, I'll tell you guys, I'm buying, I'm selling. You guys will verbally hear me say it, okay? I'm sure people don't have a problem hearing me saying it. But I was just hypothetically speaking, if we took a buy up there, look at that would be our stop loss right there, okay? So let me play this out for you guys. If you bought up there against this selling pressure and you gave it a 40 pip stop loss, you just got stopped out 40 pips and even more. Okay, so you see why just being a little bit patient, you can maybe start to visually see what's happening in the market. Maybe we have to allow it to physically come down, take out all the stops, let it reverse back up to look for that better buy up there. Otherwise, you're just buying one leg. Remember what I told you earlier. This is the one leg coming down, and that is your pullback leg. And now they're flushing it back down. Okay, so we'll see. Will it come and close again above this green box? Then that could be the second buy with a liquidity grab down there. So all of these things I'm thinking about in my head, or I'm also thinking about maybe this red candle could sell, close below here. Then we flip this green box red, and gold might continue to sell down, and you don't even need to worry about buying. No, Kevin FX, sorry. I don't want to admit he is in a loss. Don't worry, I'm full transparent. I will tell you guys if I'm in a loss, no problems. But if you guys actually think I took that buy, you guys are crazy on this YouTube call. I'm serious. I'm sorry to say that. But if you guys think the way how I was explaining that and I bought, you guys are honestly out to lunch. Okay? Sorry to say that, but if you took that buy thinking I took the buy, then you guys got a lot of work to do. Okay, that's why I don't even want to come on here and say that I'm buying or selling, because you guys, I didn't even take a trade and you guys thought I bought. This is why this is like it's a joke here. My goodness, how can I help teach when you guys thought I bought right there when I didn't even buy? Like, come on. Holy shit! How do you guys want me to educate in a live environment? How can I possibly do this? How? I tried to show you guys risk management right there, but I guess I'm the only one paying attention to today's call. I don't know, guys. This is too difficult on here. Anyways, okay, I'm gonna get off gold because I spent too much time on gold here. I'll leave it there. You guys watch gold. I'll come back. I'll do US30. This is live. Yes, this is live. Holy fuck. Guys, I think I need to take a break and I need to go smoke a joint. Let's do that, okay? I'm going to take a break. I'm going to go for a joint.
Welcome to Stock Sniper Trading. Ready to transform your trading? Discover the perfect Stock Sniper trading plan for you. At Stock Sniper Trading, we execute trades in real time on live sessions with proven strategies. Let's take you through our membership plans. Live trading and Scalper Pro signals. Our monthly plan starts from $49.99 USD plus tax. Our 3-month plan starts from $149.99 USD plus tax. Our yearly plan starts from $549.99 USD plus tax. Our lifetime plan starts from $999.99 USD plus tax. Stock Sniper Trading signals. SST monthly signals at $29.99 USD plus tax. SST 3-month signals at $89.99 USD plus tax. SST yearly signals at $249.99 USD plus tax. For more details on our one-on-one trading and consulting and subscription plans, kindly visit StockSniperTrading.com.
Hey guys, good morning, welcome to the live session of Stocks Never Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US30, sell. Okay, I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please secure.
Okay, guys, we're back. Welcome. Ron had to go smoke something. we got signals for smoke breaks. Sean. Okay, guys. Now let's go into US30. Oh man, let's flip the book over here to US30, guys. Okay, so this is a different security. This is not gold. This is US30. Okay, so over here, 11:30, 11:45. 12 p.m. and it's going to be 12:15 in 6 more minutes. Okay, so currently US30 is trending down. Lower low, lower high, lower low, lower high, broke the VWAP, lower low, lower high below the VWAP, and continuing to push down. Okay, a lot of selling volume. Cumulative volume delta, however, is positive 568. Okay, but there's a lot of selling pressure in the market for US30, and you can clearly see this leg that's pushing down. We broke the physical bottom right here, 50%, I would say, right around there, and we'll see if it retests, holds, and continues to push down. If you are in a buy or a sell, please manage your own account. Ron is not in a trade. Okay, let's start off with the daily. Okay, so what we can see here is we're working the all-time high resistance. Okay, so all-time high previous was right here, 40,000 on the dot. We actually made a new all-time high yesterday around 40,079, 40,080 area. Okay, so I like to do my zones. Okay, the previous all-time high to the body right there, should not be that complicated. Bring it across, and you see how we retested it today with today's doji candle, and we're below there. Okay, so that is my all-time high supply, and I can see, yes, they did close it above there, but no good retest, nothing to continue for new all-time high. Okay, so let's follow yesterday's volume and today, but overall, like if I'm looking for some quick nice zones, I can see, I don't think we're ever going to come back down to 37,000 anytime soon, but there is a physical bottom in the market holding green. Here's the neckline, a W. Okay, everybody should see a W. Down, up, neckline, back down, double bottom, volume close above, there's the W, there's the breakout in the imbalance fill to the all-time high. So another zone right here. This was support right there, turn to resistance right there, resistance right there, green body candle closing above. We keep the green box, stretch it across. Okay, so this area is pending in the market. This is pending in the market. We are nowhere near these levels, but it has to hit this one first before it can come into this one. Okay, that's just common sense. But we also have a zone up here. This was the all-time high double top where it came up, back down, our neckline, came back up, and then they pushed it down, volume closed below, and there's where we get our selling opportunity. So this zone was a zone in the past right here where it was resistance right there, red, resistance right there, red, those wicks, turned into support right there with the green candle closing above. We bring it across. I have red volume closing below, rejection wicks, red. Sorry guys, I'm not changing the colors here, but I'm getting it to over here. Same zone, and you can see how we are above 50% of this green candle, and the retest was right here on May 14, and we continued. So you can see we need to come down to this zone first to get to this zone to get to that zone. So I'm just trying to show you how it's building demand at each one of these levels. Okay, now are we going to come all the way down to this green zone? That's a big distance. Okay, what about inside here? Now let's mark up Do we see a big green candle on Wednesday, May 15, push through here? Yes. Okay. Where is 50%? Okay, guys, I smoked a really nice joint, and I can still see 50%. Open, close, half of it is right there. Okay. And then there's a wick below me. There's halfway point and that wick. What I showed you on gold earlier. Okay, if I want to find like the fair value distance, okay, we could trade all the way inside this green box, and we might have to find our buyers in there and bring it right back up. If the sellers close it below this green box, then it may continue to push down. Where? Down to this green box. Okay, that's your zone to your zone. Now let's follow the volume from yesterday. So you can see where Friday we closed, Sunday, Monday they gapped it up over the weekend, and we took out the new all-time high. And then it was really bearish that entire day, where it came, made the low, and there was a little bit of buyers at the end of the day where it closed it near the low. So we have a majority of red volume yesterday, and 50% of the red volume is right around there, 39,912, where we have today's high. It's still rejected at 50% or below the volume. So I can just bring that red box down if I want to today's high wick. Okay, right there. Okay, and let's walk through today's daily candle, how we opened. Okay, so we closed there yesterday. You can see the gap up in the market. They gapped it up, and we came back down bearish where we hit the low of the day. It is a little lower than yesterday's low, but not by too much, but still technically lower than yesterday. So the sellers did have enough pressure to make a new weekly low in the market today. That's my purple line, low of the day. You can still see we're holding inside. Now, this is another thing, guys. See how big the green box is from here to here? If I want to locate half, 50% of this green box, that's where my yellow line is. Because remember, it might not come all the way into at the bottom of the green box. It might come halfway. So that is my yellow line. And this is what I'm going to use for reference. If we come back down red, I'm looking for buyers to be right here at 39,700, 715, 725, give or take. Right in here. I want to see a big buyer sitting right here to take the market back up. If they're not here, then it's has a high probability it will come back down to 39,650. If they're not there and doesn't hold, high probability we're going to come down to test these 39,550. You see those nice whole numbers? And when I see a nice whole number lining up perfectly with bodies, then I know that I'm following the market correctly. Not just with technicals, but with physical numbers and psychological numbers. Okay, do you guys understand that? That I'm getting more and more confluence as I'm doing this. Now, today's volume. They gapped it up. Sellers were in control. They brought it all the way back down, but they didn't really do anything down here. So the buyers still held good positioning down here. And then they bid it right back up to where it came back up to where we opened. So where was our gap up opening price? I'm going to place a yellow line right here at 39,816 yellow line, just in case we come back down here. And I want to see what's going to happen here, because this is obviously, they gapped it up over here. So there's something significant. Why did they gap it up over there? It's a point of interest. Current volume is still above the opening price. We came up bullish where buyers were strong, and that's where they got rejected. 39,890, 39,900. That's my purple line, high of the day. And now when we look to the left at yesterday's volume, are we below or at 50%? So if I look at the opening price, closing price, half of it is maybe a little higher up there. So they kept it a lower high, below 50%. Okay, so the sellers are still in full control. And then they absorbed today's buying volume, and then they brought it right back down. But you see how now we're kind of like a spin top candle, kind of some indecision. There's still a little bit of bullish volume, but the sellers could easily exhaust these buyers and continue to try maybe push it down to test today's low and maybe come trade into the heart of this bullish fair value gap right there. Okay, maybe we do come back up. Okay, now when I'm looking for maybe some quick little scalp zones, if we do come back up green, 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 maybe I come up to the body of this candle. I know it's not too far away. We're at 830. That's 850. That's 20 pips. Maybe we come up to that next body, 873, 875. That's about 50 pip zone. Anywhere in here, okay? I could use that as reference if I want inside here. I'm going to kind of leave that off so we can see maybe we'll trade more than 20 pips. So kind of keep the zones a little bit more open today since we're looking at the daily here. Now let's go to the 1 hour quickly and see how the last few hours have been trading or what the overall move was. Okay, so these were where we took out all-time highs up here, Monday 11 a.m. and you see the bears were in full control, bring it all the way down, consolidate it. Then we look into where the moves happened. You can see kind of Wall Street in here. Look at the hourly candles, like they're real ugly. Okay, the way how they're trading. 9 a.m. opened bearish. Wall Street came all the way down, hit the low of the day, came back up, took out the highs, closed with some good positive volume above the daily open. Okay, the yellow line. And 10 o'clock we continued with some bullish momentum where it made the high of the day and rejected. Next hour, 11 a.m. when we started the call, Dow came exactly right up to the high of the day, tweezer top highs, equal highs, and they pushed it down. Next hour here at 12, it came back up and they're pushing it right back down. So now when I'm looking for some hourly gaps right here, see this big red candle, see the wick and the wick. See this red volume right there was not traded into right there. See right there where I'm placing a red box? Okay. So now that I've identified a gap in the market, bearish gap, my next job is to bring it across into the future. Okay. So I can see that there was an impulse break, which made the high of the day, but then they pushed it down and closed it below that red box. Again, there was another impulse break on the hourly, which tapped into the high of the day, tweezer top highs, equal highs, and they rejected it and closed it below. Next candle, red again. So if we get some buying volume close above 39,870, I may look to take the buy to take out the high of the day and trade up into here. Now I can see maybe my next level. You see where I got equal wicks right there? I'm going to draw a white line inside that big red box. If it does come back up there bullish, maybe that's where it comes up to. I'm going to place a white line there for reference. Why did Ron place it right there? Well, I can see when it came down red, it stopped right there at the white line, back up. It came down red, stopped right there, and went back up. Then they pushed it below there and filled. But we might come back up if we create a new high of the day. It might come up green, 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 and then that area of support will turn into resistance, and maybe that's where they reject the move. But if I'm in profit coming up there, that's where I'm going to at least make a decision up there, whether I'm going to break even, I'm doing a trailing stop loss, I'm scaling out, or I'm closing the full position. But we're nowhere near there. We don't need to worry about that now. Now what we've got to still concentrate on is where we broke this yellow line. See how there's no red volume closing below this yellow line. So this is where I kind of draw a green box to help with reference that we're still holding good support inside here below the critical daily point of interest. How are we still holding support here? Because the big bullish candle right here, it traded into red back up. It broke through there, kind of where the opening price was, right there at 6 a.m. and went back up. 9 o'clock Wall Street really has momentum volatility, and they broke that critical 39,794 area. They broke it down a little bit. They claimed a new low, but when it came down there, it hit our low of the day and came right back up bullish. So this hour, we came right back down in here, and now it's coming right back up. So our hourly candles are consolidating in this really tight, shitty zone right here. Right in here. You can continue, you can trade in this zone if you like, but you kind of got to measure from the top to the bottom so you know you're aware of what can happen in here or how big the moves are. But the bigger moves will be if we get hourly volume close above here, we can maybe take out that high of the day, or if we get some hourly red volume close below here, we might take out the low of the day and drop down to there. Right now we're still consolidating in here on the hourly. Let's look at the 5 minutes now. Here are our 5 minute candles. They just made a double top at the high of the day, where they came right up to there, came back down. There's a neckline. It came right back up again, got rejected there, and then started to push right back down. Now this is kind of that hourly consolidated zone that we could be watching, or we could trade in here. So what I do is I measure from top to bottom, so I know it's roughly about 40-50 pip zone. Okay, if you're buying from the bottom to the top, you can get roughly 40-50 pips if it makes the whole move. If you're selling from the top all the way to the bottom, you could get 40-50 pips. If you're just scalping halfway, you could get 10, 20, 25, 30, or you could pip and dip. You do what you need to do in here. That's your style. I'm not imposing my style on you. I'm just imposing, I'm just drawing the zones for you. And then the 5 minutes, they're doing something. See, when it came up there, rejected, 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 rejected. So there's a little bit of resistance right in this area where this bullish candle kind of formed right there. If I draw that zone across, I'm going to make this, I know it's a lot of zones, guys, and it's going to get real confusing, but if you just respect these areas, do I see any green volume closing above here yet? No. If it starts to build and come back up, maybe I might take an impulse buy and just to fill right back up to there. And I'm measuring the move, so I know if I take that impulse buy above the red box to come up to there, it's roughly 17 to 20 pips. I might need to just get my green buy, pip and dip up there, get my 10, 15, 20 pips and dip out of the market. Because every time I see it come up here, got rejected and pushed down. Came up, got rejected and pushed down. And then the big bearish move started. So again, I have to respect this red box. I could be in the buy and all of a sudden it breaks through there and I'm up 30 pips and maybe close above there and then I get the continuation. That, yeah, we could all do that as well. But the point of trading like this is you got to take it one zone at a time and judge how the volume is moving. There's times when I'm trading where I'm looking just for 10, 15 pips and then it turns out to be a 50 pip move. But there's other times where I'm looking for just a 20 pip move and it only turns out to be 10 pips. So you got to be really, really disciplined with this approach of trading, or just watch what's building. So now I can see that this was the first leg that came down, found support, we came right back up. There's our neckline. So now that it's coming right back down, is it coming back down into the green box for a double bottom? Are they sweeping the low liquidity? Are they going to form a higher low right here and then try and bring it right back up? Get that, maybe that impulse break, maybe get that candle that push closes above. We retest this, we're holding, it's building a nice little zone, and then we're testing back up here and we're driving back up. So that's kind of how I trade inside these zones, and the 5 minute candles are making a little bit of resistance and a pattern themselves. Right now, there's our neckline, came down, back up, neckline, coming right back down. Now we got to judge whether we're going to get the second bottom in, or are the sellers going to bring it right through here and take out these lows. And then look at where there is solid support. There's a wick right there at 830, a wick right there at 835, a wick right there at 840. Then we got bodies and then another wick at 940. The only thing that really took down to the low of the day when it broke this area was 9 a.m. and 9:35. So that's critical time in the market that they broke it down below there. Every other time it kind of held right there, and it held just recently at just after noon. Okay, so we'll keep US30 over here. If you want to add some indicators, we're below the 9 EMA still, and we're below the 200. So you see where the resistance is? Right up here. So if I'm looking to take that impulse buy, we got to start gathering a lot of liquidity down here, and we need traders to start to ask to trade back up in here. Okay, and then if you look at RSI, RSI again is below the 50 threshold. RSI oscillates from 0 to 100. So 50 is our psychological zone, and we are currently below it. So strength is weak down here when we're below 50, and sellers could continue to push it down. So we'll see where the next move is. Okay, I'm going to leave US30 side by side with gold over here. Here's gold. So you see gold broke down, came back up into the red box, got rejected at the 9 and the 200 EMA, and now continuing to maybe push down. If you're in your sell, you might be still holding your sell. To buy, I would only look to buy if volume kind of closes above this zone right here. So let's just show where it could consolidate now below the red box to that red line. So maybe we got to see something significant build in gold in the book. If we look at GC gold, let's take a look over here. So see now the heat, how sporadic it is. See, there's a lot of heat above us, a lot of heat below us. So I tend to not want to trade in this area because I can see that there's going to be a lot of volatility. There's a lot of heat in this direction. So I have to allow the market to maybe accumulate before I decide to take a move in the market, okay? What do you guys prefer to watch in the book? Do you guys want to watch gold or US30? What do you guys prefer to watch? Sam the Man, what do I mean by Wall Street? Wall Street market open 9:30 a.m. Eastern. Tends to bring in a lot of volatility in the market. Okay, so a lot of you guys are saying gold in the book map. Okay, we'll watch gold, but we can flip-flop back and forth, okay? Now, let's just take a look at what happened with US30. It came down red, red, red. See, made a higher low bottom right here. Did it come into the green box? No, so it kind of built the depth of market. We came back up, we closed as a pin bar. So now we're trying to break through that resistance that's still there on US30. This is where it could break through and we get an impulse break. We could get like a move that comes through there and it's a false break and it gets rejected and then they push it right back down. So in situations like this, when you don't know, or just wait for the candle to close. And yes, I admit you might miss out on an impulse move. Believe me, that's the hardest thing about scalping the markets is you're always going to miss out on an impulse, okay? But you just got to tell yourself, how many times do impulse trades screw you? You know, I've been screwed a million times by impulse trading. So I've come down to the fact that I've realized that sometimes I take them, sometimes I make money, sometimes I take them and I get clapped. So it's better that I miss them and I don't care and I wait for at least some volume to close above to give me some confirmation. And now it's 12:30, so we're getting a new 30-minute candle. See how maybe we're forming the second bottom on gold right here, and it's a higher low. So I can already see a little bit of a bullish gap right there where I can start to draw a green box on gold. Starting to build. You know, it's not building a lot, but it's got to start somewhere. So you can see right there on that bullish candle, and then the retest only came into there. So there's still that green volume that still is untapped. Bring it across, and you see how we started to open at 12:30 with a nice bullish ignited candle trying to break through here. So that is a very nice higher low double bottom. Even US30, this could be an impulse break above here. And I did not take it, guys. So full transparency, I'm not in any trade yet. So maybe I gotta wait for the volume to close. I might miss out on an impulse. That's life. You gotta figure out what's best for you. And then make sure you know, if you're trading impulse candles, how to trade them. What lot size are you using? What is your reasoning taking the impulse trade? What are you looking to do with it? Make sure you have a direction of what you're trying to do with that candle, okay? So that so you know that what could be expected with that by taking that trade. And please, guys, just don't over leverage when you're trading impulse candles. I don't know how much more clear to make this to everybody, but if you think that you're going to go all in on an impulse candle, then don't be surprised when you get hit hard with a rejection and you've lost a majority of your account and then you're scratching your head. Okay? I'm telling you, we've seen it a million times with guys in our group who are trying to do that with impulse candles. Yes, you might get lucky here and there, but consistently over time, it's not a good strategy. Okay, so 90 more seconds for the close on both securities. So it initially impulsively broke out of there. It got rejected, still holding majority of green volume in the candle. 60 seconds to go. We'll judge the candle how and where it closes. Okay, so you see the rejection near the end. Okay, so it came up there strong. The buyers were pretty strong in this bar, but then you see the impulse rejection, and then they might close it back below here. This might be a shooting star candle pushing down. Next candle might be red, getting ready to sell. Okay, so you can clearly see how we got rejected up there. So again, if you bought that impulse candle, you're in drawdown right now. So I'm waiting. I'm waiting for the candle bar to close. So right there, I maybe saved myself some drawdown by buying that impulse. Okay, so here's the close. Look at, they turned it red. So they exhausted all the buyers in it. Look at, they even gapped it down red. Look at where it gapped down. So let's see if it comes up quickly. Okay, let's see if it will come up green. And then if it gets rejected, could look to possibly sell US30 if it comes back down. Yeah, right there. So see, guys, I'm going to go into a sell quickly. I'm going into a sell on US30 here. I'm going to place my stop loss. I can place it above that rejection wick, or I'm going to place it maybe 50% of that red bearish candle right up there. Or I could go to the top of the zone, depending on how much I'm willing to risk. I'm looking maybe if I sell this to maybe get it back down to the bottom of the green box, maybe to create a new low in the market. So maybe that's how much I'm willing to risk on this trade. Get a 1-to-1. If it can continue to push down into here, maybe I'll slowly bring down my stop loss. But I am, full transparency, I am in a sell on US30. Okay. I'm not telling you guys to sell. I'm not telling you guys to buy. I'm telling you guys I'm in a sell. I'm not your financial advisor here. I'm trading myself here. Okay, so I'm gonna try and go off of the momentum of that rejection candle, closing below the red box. I placed my stop loss to give it some room to breathe in case some buyers bring it back up and then the sellers absorb them. But I'm looking to see if this momentum will break through the green box and take out this low and come down maybe to that next red line I have down there. Yeah, let's look at YM on over here. Gold did not close yet above this red zone. Okay, so this is, we're below the VWAP on US30 over here. I'm just gonna put a few lines over here. Okay, so this was the previous high where we got rejected at 39,984. So it came back up to that VWAP. They rejected it. We're trying to take out this low, but I'm looking to take out this physical low down here. There is a little bit of heat below us, but maybe that liquidity down there will start to get pulled out of the market once we start to sell down into there. Okay, so right there, that's like a trade with minimal to no drawdown. If you're looking for minimal pips, okay, I'm not. I'm looking for the bigger move here. I'm looking, see, down there it's about 9-10 pips. If it comes down and it hits the previous lows, that's about 20 pips. If it can come down to that red line, what I'm aiming for, it's about 30 pip trade. Okay, and I'm going against the grain. Cumulative volume delta is positive. There's been a lot of buyers, but if a supplier can come in and really redistribute a lot of this volume and take out the low and maybe cover a short position, then that's what I'll do as well. Maybe cover my short position down there, maybe pick up 15, 20, 25 pips and just dip out of the market and allow the buyers to step back in, unless these physical bodies close below some important structure. And yes, I know it could pull right back up as it's doing. It found some buyers. But now we got to look at the current order book and to see if our offers will come down, populate, absorb some of the buyers, and continue to trap them and push it down. Okay. near, where's my stop loss? Up here. Up here's the stop at 850, 39,850. Okay, and gold, you see how it got rejected again up there. So careful buying gold up there. I don't see any volume closing above here yet on gold. Let's judge whether it will come into trade into 50% of this green candle, catch a wick, and then come back up, and then might get ready for maybe an impulse break. But try and be patient and look for volume to close. Okay, so we have 50 seconds to go on our candle. It came down, made a low of our candle. It came back up with those buyers, and then the volume is continuing to absorb them and push them down. I'm going to look on the 15 minutes how we're moving. Okay, the 15 minutes, that's the type of setup I like on the 15, where it's red, came back up green, got rejected. We impulsively broke through there, and now it's coming down. If I can get this red 15-minute candle in the next 5 minutes and 25 seconds to kind of close below the structure, maybe the next 15-minute candle will have enough momentum to break through this demand zone and start to trade down here. But if the buyers bring this one back up, I have to be careful because this candle could flip. So that's why I watch it on the 5s. We came back down, a lot of buyers waiting down there. Okay, so came back up, could retest the red box. It could continue to push down, but that's a long wick. Okay, so we got a fair distance to make it back down to that low. So there's probably buyers that are going to ask to trade and protect that low, and that's what they just did. So it might flip, but there's relatively low volume on these buyers, relatively low volume. So we got to see if our sellers will absorb them and continue to push this thing down. And gold is still building in here. So now it's building a higher low. And now it's retesting again the red box. There might be multiple retests of the red box. It might also break above here, but I still have that wick where they rejected it. So I'm looking for lower highs to reject this move and maybe continue to push this thing down. This is VWAP, the white line right here, VWAP. So we're still below the VWAP on US30. Let's take a look at gold in the book. Okay, so gold was, you guys saw it coming up, making some moves, but you see where it kind of got rejected right here where that heat is at 24.26. So I'm just going to place a yellow line right here. So, you know, you got to be careful with impulse trades. No volume closed above there, so sellers are still trying to push this down, but it is building a little bit of support here. Okay, so we got a spin top candle, indecision. It came back up green. They rejected it. That's what I want. Okay, I want to see more rejections at this red box. That's a shooting star candle coming down. There's still a lot of time left on it. 2 minutes and 45 seconds is a long, long time. Okay, but remember, this candle will be the close of the 15-minute bar in the next 2.5 minutes. So it's real critical where this volume will close. And you see how we're stuck in this little zone right here? Same with gold. It's stuck in this little zone. There's just a lack of volume right now in the market. Do you guys have any questions about anything? Okay, so sellers now are pushing it back down, absorb the buyers, taking out the low. It's a nice candle, but how and where will it close? Okay, if I want to grab my 10 pips in and out of the market, I can. But again, guys, will this come back and bite me in the ass, or, you know, but I've already made up my mind when I took this trade. I'm looking for at least down here or down here. So yes, I could have got out on the 10 pips and just dipped out of the market, but I'm looking to hold this trying to break on the next 15 minutes through this green zone. It may come back and bite me in the ass, but that's trading, guys. I like the red volume. I like how it tested the low again. I like in the next 60 seconds how we're getting this 15-minute bar that's, bar coding in here, red, green, red. If this can close down here, it could be a nice flush on the next 15 minutes to fill up these wicks down here. But it's tough, guys. You can see how it's trading. It's a very, very difficult area here. Shannon, can I give a quick explanation of VWAP? VWAP stands for volume weighted average price. So it's incorporating not just the price, but it's incorporating the volume. So it's telling us a lot of these transactions are below this VWAP. So a lot of the transactions are on a volume, sell side volume, and the price is dropping. So that's why I'm kind of in a short position to kind of push down below, move away from this VWAP, this volume weighted average price. But it's like a magnet. The market is attracted to this VWAP and wants to continue to come up here and transact near here because it's a fair value. But I'm trying to see if we'll diverge away from it and push down. So did I get the close I was looking for? No, I didn't. I was looking for that 15-minute bar to close engulfed below that green one. I couldn't get it. So now we got to look at how the next candles will trade. Again, will I get maybe a 5-minute candle pushing below there and closing below? And then maybe I got to play out the next 15-minute volume in the next 15-minute candle, because now it's 12:45 and we could be going into 1 p.m. Eastern. Okay, gold. Still, it came down, respecting this green box, came back up. So maybe in the next 15 minutes, you get a gold breakout bullish above here. Maybe you get a 5-minute candle that will close and retest. A lot of things can happen here on gold right now in the next 15 minutes. Take a look at your 15-minute candle on gold. So it came down. The previous 15-minute candle was an engulfing candle, came back up, closed. If it pulls back, locate where's 50% of that 15-minute candle, right there at 24.20. See if it holds support there, and maybe we'll get that continuation. But maybe this is now on the 15 minutes. See how it came down, back up? This is the 15-minute neckline. It might need to come back down and test down here for a second bottom. And it got rejected on the 5s. US30 coming back up green now on that strong 15-minute close where it got that wick and came up. Maybe we're getting a little bit of initial buying momentum in the next 15-minute candle. So again, what I got to do is trust that the offers will come in the market and start to absorb this initial buyers and maybe continue to absorb and push down. But right now, the buyers are really, really strong at the start of this 15-minute candle. The markets are always changing momentum or continuing in momentum on these increments, on 15 minutes, on the new 30-minute candle at 12:30, 12:45, the new hourly candle at 1 p.m. It's like clockwork in the markets, going always. Niran, you're learning so much from the last 3 times you've watched our stream. Yeah, if you tune in daily, I guarantee you'll learn something new on any one of our sessions. It's just good to pay attention, okay? That's all I'm asking. Just pay attention. If there's something that goes over your head or you didn't understand, ask a question. I'll try my best to answer it while everything is happening live. Okay, so we got rejected again. It came right back up to the red box. The sellers are waiting there and rejected our buyers. Okay, so number 1, that's why I have a red box there. My stop loss is giving it some room to breathe above that red box. But, sometimes you got to allow for trades to play out in an area of consolidation. So we're really consolidating really, really hard. You can see that there's real lack of volume in the market right now. So we just got caught in this consolidated session, but it could still continue to push down. But I need the volume to close below here to get that 15-minute bar to push back down in here. Now it's just bar coding. We've got red, green, coming back up. So this is kind of like a double bottom on the 15 minutes where it came down, back up, came down, back up. So this now could be an impulse break if it breaks above the red box to take out that wick up there. So now I got to watch how the 5-minute candle, where it will close in the next 60 seconds. And sometimes, guys, if I don't like the trade, if I don't like it, I'm not like, I don't need to keep my stop loss up there just to get tapped up there. If I don't like the way how this is trading, I'll take my loss like kind of right now, so I avoid taking it up there. If I start to see 15 minutes are creating maybe a double bottom and they're going to get strong and break out of here, then maybe I don't need to take that full stop loss up there. I can maybe take a smaller loss down in here. Do you guys understand what I'm saying by that? Just because I have a stop loss set in the market right there, that doesn't mean I got to wait for it to come all the way up there and tap me out. I could close this trade right now if I want. I'm not yet, but if I don't like the way how it's developing, I take my loss and I move on. Just because you have a standard stop loss, that doesn't mean you got to allow the market to come up there and tap you out. If you don't like the way how things are developing, then get out of the trade. Okay, I'm still holding this. I'm in drawdown. But I'm seeing in the next 10 seconds how they'll close it. It's scary. It's a big strong candle right at the high. Will they open the next candle bearish, bring it right back down, or will they gap it up? And if it takes out that wick, then I got to watch really what's happening. So it's an ignited open. They opened it green. They came up, still holding green. So if it holds here, it may have that momentum to take out that wick. And remember, this is the strong 15-minute candle. This strong green candle in the market might come up there and fill those wicks. And it's right, conveniently, right at the VWAP, right there. And gold is still just really consolidating right in here. Okay, so it's testing that high. Is it tweezer top highs? Is it going to be a bullish breakout? It's probably going to be bullish on that strong 15-minute candle. So I can accept my loss right there and step out of the market, but I just want to see how it will transact at that VWAP. Okay, so it was really close, but kind of see, okay, it came up there, it got rejected initially. There's the wick rejected. Again, will they exhaust those buyers and close it back below that red box, or will it come up and close above that green box? And then that's maybe next candle I might have to take my stop loss and just exit this trade with a loss, because I see it took out the high, came back down, now it's gathering more liquidity. Okay, so I can maybe lose less as opposed to lose my entire trade up there. So I'm kind of judging what will happen up here. I know it sucks because it's 3 minutes in this candle and it's still green. So it may come all the way up there and take me out. So it's these 15-minute candles right here, double bottomed. Red, green, red. You see, I was in the trade right there on that red candle as it was coming down, hoping it would close down there. It didn't, and now I'm stuck inside this trade against this big, strong, green 15-minute bar. And it's probably going to maybe come after my stop loss up there. And gold is getting a little bit of a break. Watch for volume to close in the next 2.5 minutes. Maybe a short pullback. Maybe flip your red to green box if it does close above. Maybe could look for a gold buy. I'm still holding my loss of US30. That's a good rejection, okay, but it kind of need it to close back below the red box, and then maybe then I get a red bar coming back down, okay. But I'm holding in drawdown. Okay, so that's a nice rejection. It's nice for a seller. Got rejected. It's a shooting star candle coming right back down. But I need, in the next minute and 20 seconds, I need this bar to close below this red box, or maybe close below 50% of this big strong green candle that started that big bullish move. Did anybody say trading is easy? Did anybody say trading is easy? It's not easy. So for anybody that tells you trading is easy, trading is not easy, guys. Trading tests your emotions always. Like it's non-stop. It's very difficult, you know. Like for anybody that says it's easy, I always shake my head and say, how is trading easy? Never. It's one of the hardest professions, hardest skills to do. Because if you go to your work, you work a 9 to 5, you go to work, you come home, you're guaranteed a paycheck every single day. Traders are not guaranteed anything in these markets. I'm not guaranteed to make any money every single day when I trade. I was just in a loss right there. You know, I could have closed that trade losing money, losing my time and money. Okay, so trading takes a lot of hard work, takes dedication, sacrifice, learning a lot about yourself. Okay, not just, you learn a lot about yourself. I've learned a lot about myself trading over the years. It's really made me a better person in my everyday life. It's taught me patience, taught me discipline. I have kids. I've learned so much of patience and discipline from trading. How I am with my kids, they drive me crazy. But I've learned to be patient and disciplined with them. Green candle close strong on gold. Did you guys see I just flipped my red zone to green? It's an ignited red bar. Look at it closed right near the high, okay? And then they opened it ignited red. So if it catches a short wick, it could possibly pop and then just has to fill these wicks and it could start to drive up to that yellow point of interest. If it does retrace back down, it still has not came down into our green box. If you're not in a buy, then maybe now you gotta kind of wait for it to maybe come back down into here, and then maybe you can take your buy in the green box and then get it out of there. Okay, so you gotta decide. Do you want to buy right now on this candle, or do you want to kind of feel out the market, see if it will come back, maybe 5 minutes, 10 minutes, 15, 20 minutes, back down into here, and maybe allow you to buy in here cheaper as opposed to buying the high. So you buy more at a discount down in here. I'm getting the play I want on US30. I had to hold in that, but that's why I gave it a little room to breathe up there. But now let's follow the 15-minute bar. Look at that. That's beautiful. That's the rejection. Look at it. I got 1, 2, 3 hard rejections. Now I just need this volume to close below inside this green box, and then maybe the market may reward me on a sell, but still holding this demand here. Holy shit. Strong support at this green box. I'm trying to sell, guys. I'm back in profit again. Now, do I want to just get back down to that equal and then grab my 10 pips and just get out of the market? No. Considering I just held in that drawdown now I really want the market to pay me. I want to break there no matter what. I'm willing to go again into that drawdown to maybe this is me being stubborn. I don't know. Again, I'm trying to walk you through my emotions as a trader. I'm back, could get my 10 pips back and just close the trade and just get out, but then I might miss out on the bigger move. And this is what I've been waiting for this entire time. So I might as well play it out. Okay, I got a nice big raw bearish ignited candle coming down. Can I take out these lows? If I see a triple bottom lows down here, you're probably going to see Ron go smoke another joint. You're probably going to see Ron go smoke another one. Go on pause and smoke another one. Trading can make you go crazy. I agree. Okay, so we're getting a flush. Okay, so we broke a new low. The candle bar is going to close in a minute 50. Okay, so we need to see this physical bottom. We can right here, all of this. We came down there. We came down there, came down there, came down there, came down there. Again, we came down there. Now, can we now do something below this area in the depth of market? Again, it's coming down there, but these buyers keep asking to trade up here. So we need to get a nice physical close. We're 2 minutes away from 1 o'clock. Oh my goodness. This might come back and bite Ron in the ass, because at 1 o'clock, we might get buyers. Look at this candle might close with asking all the way up here and then go into 1 o'clock, and it's a green move coming up here, hunting for my stop loss. So let's watch how this thing plays out. But we still have a nice hanging man candle. Yes, it did come down, create the low, but those buyers are stacking in there. We still have a nice bearish head on our candle. So 55 seconds to go. Maybe this red volume will come back down and close near here. The 15-minute candle was set up perfectly where it came down, but you got to wait for these things to close. But I've got a lot of upper rejections. All I need is just the volume to complement the trade by closing below there. And I got another 15-minute spin top candle where initially came up, back down, coming back up, and look at where it might close, right where we opened this for 15 minutes. So, but welcome to the life of trading, guys. And gold maybe gave you a retest right there where it came red, 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 a wick right there. Maybe you got to wait again for another candle. It's consolidating right up here. Wait till 1 o'clock. Let's see what happens now. Okay. Here's now 1 p.m. New hourly candle. Momentum might shift. Okay, so it came, still closed with a red volume. That's a hanging man candle. We initially opened red. Will they have enough momentum to maybe take out the low now early in the 1 hour? Or is it going to create a higher low and we're going to have buyers come back up and maybe get absorbed? Okay, this is the candle I want. It's an ignited red bar. It's perfect for selling the market. Doesn't get any better than that. I'm back down to 10 pips profit if I want to close for a third time and grab these 10 pips. But stubborn Ron wants to break this wick down here and come down to here. You guys are living through me being stubborn here. Gold might make a 3-bar play. Green, red consolidation, ignited green bar might continue breaking out of here. And then when I'm looking at the 15, okay, that's what I want. An ignited red bar off of a nice rejection. Can it come down and take out this low for sure? But then will it work that low at the bottom of the green box? Okay, see how many buyers it's trapping? See, every time they ask up there, then the sellers keep pushing them down. So if they keep asking and the sellers are still there pushing them down, we might get that break of that low. It's at a real critical area here. Holy. Where's the volume this afternoon? Nope. So they're still protecting this area. You see how long sometimes it takes for a trade to develop? Like, I took this trade. It's been 5, 10, 15, 20. It's been 30 minutes already. 30 minutes. And it's like a yo-yo. Sometimes I get into a trade right away and it drops 10, 15, 20 pips, makes my decision real easy. Other times you gotta play out a trade. I intended to scalp this. Now it turned into a 30-minute hold. So you can see how scalps can turn into longer holds. Unless I grabbed my 10 pips and just dipped out of the market. But that was not my intention to just pip and dip on this. I'm actually looking for the structure to break bearish on this play. And I might be 100% incorrect on that because I'm trying to break a physical green zone. It's not that easy. Yeah, trading calls for a lot of patience. And also accepting a loss. Like I'm fully aware that I might take out a loss up there. Fully aware of it, but I'm allowing the market to play out. It's kind of did what I wanted it to do. It got rejected above there, got rejected above there. We're still below the 200 EMA. We're currently below the 9 EMA. We're currently still have volume closing below the red box. It's just this physical area of support we're trying to break. There's a lot of buyers holding that area. Yeah, gold looks strong. Could be a bullish breakout. And look for gold to break this wick right here at 2424.50, and then take out that next wick right there at 2425, and then make its way up to the yellow daily point of interest, and then just bring this red box across that we found on our top-down analysis, and maybe it could fill up there. If you're still waiting for a possible retest, still we haven't came into the green box, so keep an eye on this green box. If a red candle comes down and trades into here, it may be your opportunity to pick up a buy on gold down in that green box. Okay, so there's a lot of indecision going on with US30 right now. It came down, sellers are pushing it down, buyers are bringing it right back up. There's a little bit of selling pressure bringing it right back down. 30 seconds to go into the close. This could close as an indecision bar on the 5 minutes. It could close bullish back up here, or sellers could bring it right back down. It could close right where it opened, and these are our 50-50 bars, neutral. Okay, so here's the close. So it closed bullish with some green volume. Next candle, they gap it up green. Okay, so you can see how they gapped it up green. So they're asking to trade back up here. So then I got to go through the market again. I got to see if these offers will hold the position. You see how we've got some heat at the VWAP? Okay, so we've got 65 offers there, 65 and 45 right up here at this 39,966, 969 area. So we do have a lot of heat above us, which is there to possibly absorb the buyers, okay? But maybe we don't even need to come up here. Maybe the depth of market is strong in this area that maybe we can absorb and then start to take out these bids down in here. So initially they gapped it up to prop it up and to push it up, which they did, but it encountered some offers. And then that's the wick on the candle. Now flipping, remember we gapped up and opened green. Okay, so those were our initial buyers when the candle opened. We just traded back into them, and they're asking again to trade back up here. So there is a lot of support on this move. This entire green zone is holding. So now it makes me rethink my drawdown. Now, if it comes back up strong, knowing how it's picking up more and more demand and more support, maybe I don't want to give it that much room to breathe. Maybe I want to lower my risk. Okay, so have you guys ever done that before, where you've lowered your risk in a trade, where you've originally give it a stop loss, but you see how the market is developing and how it's still holding strong, that maybe you might need to reconsider your stop loss. I've been in this trade for almost 35-40 minutes now, so maybe I got to rethink how much do I want to lose on this? Am I still holding this thing? How are things developing? So every single candle, you see guys, I'm constantly thinking of what to do. Every candle. I don't just open up a trade and just hold it and hope for the best. I'm always kind of manipulating my move. Here's a possible retest for the gold buyers. See how it came green, red, green, bearish ignited. Now it's coming down into the green box. Let's see if it picks up a wick in here. Maybe we'll rotate back up. Okay, now it's trading into our green box where it has not traded back before. Now we're getting a really nice bearish candle at the close. Will it close below here? This is now our 15-minute candle pushing down. Rejection, came back up, lower high, push down. Can we now, 7.5 minutes to go on this 15-minute candle, could we get it to bleed out down in here? And maybe we can collect maybe 20 pips on this down into here, the bottom of the green box. But see guys how we absorbed the pullback, we absorbed the buyers, but they're still right here. They're all right here. The market cannot break this area for the life of it. You see, like I'm holding my trade for one time. I had there, I could have possibly exited. There I could have got out. There I could have got out. There I could have got out. And this candle I could have got out. and I didn't. So how many times is the market going to slap me in the face? Okay, I know it's not a lot for some people. 10, 12, 13 pips is not a lot, but for a scalper, it could be exactly what they're looking for. And the market has slapped me 5 times in the face right now. But the candle has 90 seconds to close. So Ron is being patient. I'm playing out this move. I'm allowing the higher time frame volume to come to me. The 15-minute candle is what I'm basing this move off of. Can the 15-minute candle with 6 minutes left to go, maybe can we cause maybe a squeeze to all the buyers and force them to hit their stops, and then you and we can make some profit on this move? Okay, so now we're looking to take out the low right there, that 39,812. Now I'm looking for it to come down to the bottom of the green box and kind of redistribute volume down here, maybe hunt for some stop losses. But this is important in the move. We did create a new lower low. Regardless of what happens now, we did create a new lower low. We hadn't done that for a long time. So that's part of continuing to push down in a downtrend. You have to make lower lows and lower highs. So this is another piece of the puzzle that we need to complete this piece of the puzzle in order to continue to drop. Without a new lower low, I'm sorry, then it will come back up. Okay, so let's watch how it's going to close now. In the last 10 seconds, will it close near the low at the new lower low? I can pretty much 99.9% guarantee the next candle will come up green because we're in the green box where the buyers are waiting. But then we got to judge, where's 50% of this red candle? Okay, so we close red. Open, close, here it is, 99.9% turn green. If we come up, see what I'm doing now? I'm judging where's 50% of the volume in that last 5-minute candle. It's larger than all of the other candles, and now we had it open up green. They're pushing it down, so maybe they can continue to push it down at the bottom of the green box, and that's our 15-minute candle pushing down right here, continuing to push down. Now we have only 4.5 minutes to go on the close of our 15-minute candle, so we'll watch it close on this 5. That's a perfect continuation on the 5-minute candle. There we go. Okay, so the bottom of the green box, guys, that's 20 pips. If it can come down there, like I'm just measuring at those previous lows, is about 20 pips. But with that momentum, maybe we'll break. Okay, there's 20. Okay, so you guys do what you got to do. Okay, if it breaks halfway, could be 25 pips, and then I had it measured to come down to the bottom of there for a full 30 pips. There we go. Yes. Okay, boom. It hit my target. I'm closing the trade. Okay, regardless what happens, that was what I intended for this move, 30 pips. That's it. More, if you guys got time to leave a runner, do it. If you guys are holding, I hope you get down to that purple line. But that was good enough. Oh, shit. This is a mad squeeze on the buyers. Oh, damn. Okay. But don't get too greedy. Okay. You saw, guys, we waited for that shit to happen long time. Whew. Damn. That was a long ass trade. Ron's gonna hit the bong after this. Guys, I'm in and out, okay? I hope that explanation helped you guys. That's a live trade in drawdown, showing you entry, showing you exit, going through the emotions, trying to entertain you guys, have a good time with you guys. Hit the W's in the chat if you guys took that and you made some pips. Hit the likes, subscribe to the channel if you guys got some informative education out of that. Help support the channel, guys. Okay. Thank you, guys. I appreciate that. But any questions on that trade? What made me go against all the buyers was the way how the depth of market was shaping up. And also, you guys saw me keep flipping to the 15-minute bars. Okay, that's another thing. I scalp 1 in 5s, but you see how I pay attention to the higher time frame? Because higher time frame tells you more of the story. So that's why I stayed with my sell position. I saw a lot of 15-minute candles get rejected in around my red box. We kept coming up with buyers, but you see how we kept trapping them below the VWAP. We continued to develop the depth of market, and then finally, once we broke this area of support, you see how we squeezed all those buyers. How big of a drop it is. Let's just see. Pretend you were a buyer, okay? For example, if you bought anywhere at these wicks, if you bought this wick, this wick, this wick, or that wick, where do you think your stop loss is? Your stop loss is below the previous low, or maybe at that red line. And then if you measure it, like think about yourself when you're in a trade and you get squeezed. If you bought up here, the move kind of squeezed them right there for 30 pips, and then it came down to there. Look at, they almost got squeezed for almost 40 pips. Okay, think about yourself when you're in drawdown. You know, like same with me. I told you my stop loss was up there. If they squeezed me out, they probably would have squeezed me out there. The most I was willing to risk on that trade was that amount, and then I probably would have been squeezed out of there. Okay, but now what you can do is, if you're still in the trade or not or whatever, reduce your risk, go to a break even. And then maybe this will continue dropping. How many of you guys did this before me? See the big green box? The red candle is below. Have you flipped this red? And maybe we'll continue selling down with this momentum this afternoon. Okay, right now that's our purple low of the day. You see how we just missed it by 1 or 2 pips, and now it could come back up. It could come all the way, retest the red box. Sellers could be absorbing and continue to flush down this afternoon. Okay, so at least go to a break even. Okay, that reduces your risk now. Now you got a free trade. If it dropped down a certain amount of pips, 20, 30, 35 pips, you could still be in the trade with a trailing stop loss. You could have exited with a certain percentage, 50, 60, 70, 80%, and you're out. Or you could have done what I did and just closed the entire trade, because Ron needs to go smoke another joint and I just need to get away from the charts right now. So I don't want to continue to babysit the trades anymore. I'm done. You know, that's it. I told you guys, my intention was place my stop loss right there, take the sell right there, and I told you guys I could have got out at 10 pips 5 times. Ron's stubbornness was to hold the trade and take it down to that red line, 39,794. Where did I get that red line from? Right there, guys. Remember we did the top down? Just look at all the structure. Ron got the red line right there from this morning. Look at the bottom, 4:40 a.m. Eastern, double bottom, 5:55, right before pre-market, 6 a.m. London, New York. And then how many wicks are in there? 8:30, 8:30. Is there not news every day at 8:30? 8:30. Is there not something big that goes on at 9:30, 9:35 Wall Street? There it is. And then you see, yes, the extension, I could have got a little bit more, coulda, woulda, shoulda, but look at it, tapped into the low of the day right there, the purple line. And then look at the next candle. It's a bullish ignited candle coming right back up. So I didn't want to piss away those extra pips. That's why Ron is disciplined, in and out. Cut the grass right now because my neighbors are getting mad at me. we got turf wars in my neighborhood. We got turf wars. All of my neighbors are all retired around here, and they take their lawns serious. It's serious business. Like, I didn't know about this until, like, these guys are getting pissed off at me. If I'm not cutting my grass like every other day, they give me dirty looks. So Ron has to go out there now, take care of the lawn, guys. It's turf wars over here. But guys, I hope you guys enjoyed this. Okay, please listen to what's going on in these calls. I tell you guys when I'm taking trades. I tell you guys where I'm exiting. Tell you guys if I'm in drawdown. I tell you guys if I'm holding. It's a live analysis. It's live markets. I'm trying to entertain your questions. I'm on Zoom. I'm on YouTube. Multitasking, multi-charting, doing a lot of things for you guys. Okay, just take it easy. Pay attention to what's going on, and maybe you'll learn something, as opposed to just being a smart ass and asking, when I told you I'm not in no buys on gold, so I don't know where you got that from. But if you want to play those games, it's your loss, not mine. You can act like a clown if you want, but that's okay. Guys, I'm out, so I appreciate you guys. Please hit the likes on your way out if you learned something new. We'll see you guys tomorrow. Same time, 11 a.m. Friday, I do have to take off. I'm going on a field trip to insects and bugs with my daughter in grade 2. So it's a full day event starting at 9:30 till about, I won't get back till like 2:30 p.m. Eastern. So Friday I will be taking off, but tomorrow we're back in the markets. Tomorrow is a special day because Wednesday after hours Nvidia is reporting. So take it easy in tomorrow's markets and pay attention to Nvidia's earnings and conference call and guidance tomorrow after hours at 4:20. Okay, so we hope you have a great day. Snipers in Zoom, you guys, I hope you guys had a great day today. Learn a little bit of discipline too. If you've hit your daily goals, get out of these markets, go cut the grass like me, go on with your day, go do some hobbies, get out of these markets because you might end up giving back your profit. Okay, and look at that big nasty green candle. So the woulda, shoulda, couldas. If I never closed down there, look at this nasty candle coming all the way right back up. Okay, so the markets are ruthless, guys. Okay, so you got to know that. So don't take anything for granted from these markets. Always plan your trades, your entries, your exits, your stop loss, and play it out and see what happens, okay? Without over leveraging and without over risking your account. We talked all about this at the beginning of the call, okay? Thanks, guys. Enjoy your day today, or else I'm going to sit here and talk all day. We'll see you guys tomorrow. Please visit us on our website, guys, if you want to join the team. Join our free Telegram group right over here. It's pinned at the top of the YouTube channel for you guys. There's a lot of things that go on here at SST. This is all for you guys. There is a promotion going on right now. If you guys want to join, this is probably the time. You get a full 3-month membership, including all live sessions with myself, Shahab, and Dave in London, New York, and post-New York and Tokyo sessions. You get SST Scalper Pro signals we talked about at the beginning of the call, 52-week education content, live weekly webinars. You get the private sniper Discord community with all of the snipers kicking ass in there, sharing your charts, teaching others. It's an amazing community, and access to our SST strategies. Okay, guys? But if you're not going to sign up, no worries. Just hit a like button on YouTube and continue to support our channel. And if you want to join the team, we got you. Okay, guys? Have a good day. God bless. Thank you, guys. Enjoy the rest of your day.
Welcome to Stock Sniper Trading. Ready to transform your trading? Discover the perfect Stock Sniper trading plan for you. At Stock Sniper Trading, we execute trades in real time on live sessions with proven strategies. Let's take you through our membership plans. Live trading and Scalper Pro signals. Our monthly plan starts from $49.99 USD plus tax. Our 3-month plan starts from $149.99 USD plus tax. Our yearly plan starts from $549.99 USD plus tax. Our lifetime plan starts from $999.99 USD plus tax. Stock Sniper Trading signals. SST monthly signals at $29.99 USD plus tax. SST 3-month signals at $89.99 USD plus tax. SST yearly signals at $249.99 USD plus tax. For more details on our one-on-one trading and consulting and subscription plans, kindly visit StockSniperTrading.com.
Hey guys, good morning, welcome to the live session of Stock Sniper Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.